their IT systems and surveillance that they have on them. And two, it will give the confidence to the customers in terms of undertaking digital transactions with the banks. Now, there was also this, it's I think part of the theme as well, and there was reference to this in the discussions, financing the informal sector. And I think it was Tamal did raise it, that the mainstream banks, the universal banks, who were possibly in the past buying those portfolios from MFIs, or lending to MFIs to meet the priority sector targets, some of them are finding it, advantageous to do this themselves. So we do see some, inorganic growth happening in the form of mergers of some of the MFIs with the banks, which means that the banks want to do this themselves. Hopefully, this should result in some reduction in the cost of borrowings for those ultimate borrowers. That's something that we're looking at. So when we look at that MFI borrower, there's another important element that I thought I must mention here, which is the entire reform around credit information. The credit information in the past was highly fragmented. So we had 4 credit information companies, one of which had a large share because it had started even before the act was passed, and therefore the information that was sought was fragmented. So if you pull data from anyone other than the main person, it's likely that the information was incomplete. So we began with the first requirement that everybody should report credit information to all the 4 CICs that we have. We shortened that. And now, second thing that happened was, there was a need to capture the data with regard to at least the members of the SHG. Because particularly many of the members of the SHGs are the ones who borrow from MFIs or from banks in the form of small borrowings. It's very important that the credit information collected on them is complete. So what we thought was that it might not be possible to capture actual credit that an individual member of SHG would have obtained from the SHG itself, but the fact that he is a member of an SHG is captured in the Credit Information Bureau details. So what happens is that if you pull an information from a bank, from a CIC, you would know that this person has borrowed from an SHG. The amount can always be found later. So we have moved in that direction. And the third, I think, another important element of this reform on the credit information company side was, of course, the 360-degree information. In the past, the credit information companies gave information based on the module. So if somebody asked for a housing loan, only the housing module or the personal loan segment used to be given. So we made it mandatory that if an information on a borrower is sought, it cannot be module-wise. The entire credit information on a borrower has to be given to the financial institution concerned. So the idea was that it's been proved empirically that quality of credit information is a very important ingredient for credit quality itself. So that's one thing that we've done. We added that with another, I think, I don't know whether it's sui generis kind of. We made it mandatory for every CIC to give access to one credit report in a year to every borrower. So what we found was, in the past, the borrower was taken by surprise. There could be errors in the information reported by a bank, or there could be errors in the understanding of the facts by the borrower, and that resulted in a lot of disputes at the time when the loan application was being processed. So we thought that the borrower could get once in a year a free report, which would enable him to correct the facts if there are any, so that the information that is available with the CIC is correct and up to date. So this is something, I'm not too sure whether it's available internationally, but that's something that we have kind of ensured, and I'm glad to inform you that I have checked back on whether this is functioning satisfactorily. It is functioning satisfactorily, and that's a matter of great comfort and credit for us. The next element in the what you call lending landscape, if you look at, would of course the P2P lender. So we had we had this issue with regard to regulating this segment, whether you should regulate a P2P platform, how should you regulate them? And last year, middle of last year, we came out with the final guidelines on P2P lending. We had two issues that we had to kind of be worried about. One is that the people who are lending through that platform are adequately informed, number one. Number two, we didn't want the P2P platform itself to be taking positions, because we found that elsewhere where this P2P had kind of failed, the problem was that the P2P platform itself was a lender, and therefore this was almost like deposits coming from public and going. So we had this concern, so we made it very clear that no money of the lending segment of the P sits in the P2P platform. The P2P platform is just a broker who gives information. And there again, to improve the quality of credit information, we have made it mandatory for them to report those transactions with the information company. So it's a one way that the the P2P cannot access credit information directly without the permission of the borrower, but whatever they have lent, whatever has been lent through the platform, that information has to be necessarily given to the information company so that the information is complete. Of course, there is the next element, of course, is the whole issue of fintech. Fintech, of course, as somebody said, banks are, there are many ways to deal with fintech. Many banks have thought it as not a competition. It's better to assimilate fintech into their business process. So that's one way to deal with it. We of course, are looking at P2P is one element of the fintech. So we should look at what kind of other activities in the fintech segment should be regulated. So there are working groups studying on that. And if you remember, this Mr. Ramdurai Committee on Household Finance had kind of suggested that we should have what is called as a sandbox approach to dealing with these fintech entities. And that's something we will examine and consider at an appropriate time. Of course, when you talk of the banking system, we cannot a regulator cannot but refer to the NPA issue as well. NPA, one good thing though is that after the amendment to the Banking Regulation Act, which empowered RBI to direct banks in respect of certain stressed accounts, you are aware that the Reserve Bank has taken certain measures and some of them are at various stages. At the same time, what we find is that post the asset quality review, the asset quality review revealed, of course, certain additional accounts to be identified as NPAs. Slowly we are seeing some of the stressed assets are turning NPA, of course, but we are also seeing that the rate of slippage, there is a deceleration in the rate of slippage of NPA, so maybe that's some positive sign. Hopefully, we will have a system where along with the credit growth that we are seeing and maybe some kind of stability around the NPA numbers, which hopefully they decline, we are looking at a positive, much more positive outlook for the banking system in India, coupled, as I said, with the strengthening of the public sector banks by the way of provision of recapitalization by the government. All in all, therefore, I want to I have just 2 minutes. I just want to conclude by kind of saying three big kind of things in this context. One, we do see that there are positive developments happening in the banking system, number one. We on our part are kind of, will be of course monitoring the banks very closely, and the regulations of course will always be in line with what is required internationally and consistent with the domestic requirements. So going forward, I do see that there is more dynamism in the banking system. There is room for optimism, But of course, as usual, in banking you cannot be but cautious. So I think while the growth in credit is a good thing that's happening, it's very important that we learn the lessons of the past and ensure that the quality of credit growth is of the high order that we want it to be, so that when we again talk next time in another conclave, we are looking at even more positive signals for the Indian banking industry. On that note, let me end. Thank you very much.
So thank you so much for sharing your thoughts here with us. I'd like to invite on stage Tamal Bandyopadhyay to help us present the Governor with a small token of appreciation on behalf of the entire team of Mint. Thank you, Jen.
India has transformed herself over the last decade, and infrastructure development has been fueling this growth and economic activity, be it highways or expressways, or engineering marvels like flyovers and bridges, or tunnels facilitating connectivity. Toll-based public-private partnership projects make infrastructure development sustainable and viable. The rapid development in infrastructure lays the foundation, connecting people, connecting cities, driving growth across the nation, and connecting India. IRB Infrastructure Developers Limited, Highway to Growth.
बंजर जमीनों में हमने कागज के लिए खास पौधे उगाए, किसान हुए खुशहाल और स्कूलों में बच्चे आए। उन पेड़ों से हमने कागज कॉपी बनाई और उन किताबों ने बच्चों का भविष्य। जब हम इकोनॉमी, एनवायरनमेंट और सोसाइटी को साथ लेकर बढ़ेंगे, तो देश और आगे बढ़ेगा। ITC, सब साथ बढ़ें।
Welcome to Gabon, an African hub that is a gateway to the region. More than 40 years of institutional stability driving the business environment. Established special economic zones, world-class ports and infrastructure facilities. We are open for investment. Gabon calling.
You know, three largest private sector banks here, Chanda Kochar representing ICICI, Sika Sharma representing Axis beside Aditya Puri. We have a very large public sector bank, Jayakumar, Bank of Baroda, and finally the largest foreign bank operating in India, Citibank. Now, these two ladies and four gentlemen, among them they represent about close to half of banking assets in India. And of course, Citi is not listed, but the rest of five accounting for about 64% of market cap of Indian listed banks. So give them a big hand, please. So we have the session on the changing Indian banking landscape. That's oft used in Mint Banking Conclave, the landscape word. But this time is particularly different because we are seeing dynamism and optimism. And some of the reasons been explained by Mr. Viswanathan in his welcome keynote address. Of course, he was pretty cautious because monetary policy is tomorrow. He could not go beyond, he could not be more very frank, but we must thank that he took his time off and came here and addressed this August gathering. Why we are seeing optimism and why we think there will be dynamism. one possible factor is see that the banks are on an overdrive to clean up their balance sheet. For the past few years, we have been only talking about ballooning bank bad assets. Reserve Bank of India had gone for AQR, asset quality review, and asked the banks to clean up their balance sheet between September 2015 and March 2017. Banks did that. RBI was not happy. RBI started asking them to disclose the discrepancies, the difference between what they thought is the NPA and what the RBI auditors thought. And then we have this new law which empowered RBI actually micromanaging, asking the banks which companies to take them to the insolvency court. So in the first round, 12 companies were the RBI asked them to refer to, and then 28 more. So this is one area the balance sheets are being cleaned. And of course, then we got the development where Indian government announced largest ever 2.1 trillion recapitalization. Now, how large is this? This is 1.3% of India's GDP and 40% more than what Indian government had pumped in between 1986 and 2017. And now we are seeing, of course, the first flicker of credit of tech. So this is the background. In the next 70 odd minutes, we will ask these ladies and gentlemen, are they prepared to take up the challenges? Is the worst behind us? We'll start with Chanda Kocher, ICICI Bank, and let me put it very clearly. There's no question about any bank. We are talking about the industry. And of course, if anybody is waiting for kind of prime time TV kind of debate here, they'll be a little disappointed because there won't be any noise, there won't be any fight. And as a moderator, I don't have any opinion. Okay, mine. Yes, so as I said, you may not like it, but that's what we would like to go along. So Chanda, tell us on the NPA front, and I'll ask the same questions to everybody. Is the worst behind us? Is it a right approach to say that we have completed the phase or near completing the phase of recognition of bad assets, and now we are seeing resolution? And if that is true, how long it will take? For the record, RBI's financial stability report last year says gross bad assets of Indian banking system was 10.2% of their loan in September 2017. Stability report says it could go up to 10.8% in March and hold on 11.1% in September 2018. So RBI's calculation is this: the worst is not over. We will see more NPAs coming out. But as the Deputy Governor said, the pace of slippage has definitely slowed down. So Chanda, with you, do you think the large part of bad loan recognition is over, and now we are in a phase of resolution of bad assets? And if that is true, how long that will take?
Yes, so Naval, you heard the DG himself say that there's a reduction in the rate of addition to NPAs. So, when you say is the addition to NPAs going to be over, there's never going to be a scenario in banking where there would be no additions to NPA. But I think the rate of additions to NPA has definitely slowed down. I'm not really going into ratios because the ratio also depends on how fast the asset base grows. So I'm really talking about the additions to NPA, and I think that we are seeing bank by bank that the rate of addition this year would be much lower than the rate of addition in the previous year. But as you're yourself saying, I think my firm belief again is that NPA is not just about recognition. NPA is, we talk of recognition, we should talk of resolution, we should talk of recovery. And I think so far we have all spent a lot of time talking about recognition only. As of now, I think the focus is on resolution, and that is the good news. The focus on resolution means that actually 12 cases in the first list have already been referred to NCLT. The next set of cases also have been referred to NCLT. In fact, in list 1, now we have started getting the bids, and some of the bids have started being opened. The first bid was opened a few days back. The second bid should be opened today as we speak. So the positives here are that, the resolutions seem to be moving in a time-bound manner. If not 180 days, 270 days, but there's a finite time-bound manner in which resolutions would happen. Secondly, I think this also forces all the stakeholders to sit together and arrive at a certain decision in a time-bound manner. So again, the delays that were happening on account of non-arriving at decisions, I think that also moves better. The third is that for the operating assets, we are actually seeing very good interest, both in terms of the number of bidders, the type of bidders. You have bidders from strategic side to financial side to combination of strategic and financial side and so on. So I think these are all the good signs. Well, we have to still see what exactly are the values that we would get in these assets. But broadly, the thinking is that for the operating assets, we should get good values. For the non-operating assets, maybe it may be liquidation values. So all in all, I think resolution seems to be moving in the positive direction.
Do you have any time frame in mind? When do you see the reasonable end of this resolution phase?
So clearly,
at least for the big accounts?
Yeah, so, the first list of 12 cases is actually a very big set of accounts for a large proportion of the NPA of the entire industry.
That is 2 trillion. They account for, among them, this 12 account about 2 trillion, right?
Yes,
yeah.
Almost similar to that. And for those cases, the 270 days will end between April and May. So I think next quarter is in a way going to be a litmus test of, seeing some of these large cases through and really, finding out what are the values that we get in terms of recovery.
Okay. Mr. Rajneesh Kumar, I am keeping you for as the last speaker of the round because you are, you have a finger in every pie. All the 12 places, somehow or others, that's not your fault. That's the price you pay for being the largest lender in the country. So let's ask Jay Kumar. He is an interesting personality in the sense a private person picked up from the market and leading a very large public sector bank. So tell us, where do you see in which phase we are, both in terms of asset recognition, bad asset recognition I mean. Yes, continually as Chanda says that if you are in banking, your NPA, there will be always NPA. But I'm saying is the worst over? I mean, that's the kind of thing. And it's just behind us, the recognition part, and we are in the resolution phase, and how long this will take?
Okay, let me put it this way. See, we'll wait for this quarter's results of all the banks to come in. But I was looking at the top 3 public sector banks which have given the results, and the slippages for this quarter are actually higher than what it was in the last quarter. To me, that signifies the fact that probably recognition is happening more aggressively. And we might see some of that flowing into the last quarter. It's also possible because some big ticket transactions came along the way at this point of time. But what I'm definitely seeing and envisaging is that the extent of recovery is probably going to be stronger, as a consequence of which the absolute NPA levels are probably going to get stabilized. If not this quarter, the following quarter. In that sense, I feel optimistic of the outcomes.
Okay. As far as the resolution part?
See, we are kind of placed in a kind of a middle way. All the large accounts that are there, we have 1.5% market share, so we are really not involved in that process actively. But as far as the smaller accounts are concerned, like a cement company we handle, or a couple of cement companies we handle, a number of those things, we are seeing progress there. There is enough amount of expression of interest, and whatever price we are going to get or likely to get are going to be higher than the amount at which the book value is. But we need to see more of them happening. On the other hand, there are certain categories of assets such as real estate, where there is a discussion around whether the consumer interest comes first or the banker's interest comes first, and that discussion is underway. So we might see some of those things working a little slower. That broadly is my summary of the position. But we need to see more examples. We need to see more transactions being brought into the NCLT, and it's going to be a process that's going to take 12 to 18 months at least, bringing them across and resolving.
18 months. 18 months. That's the process of resolution they are talking about, right? You said at least
the significant end of the cycle. Yeah. Obviously, everything is every day something is happening. Yes. Some resolutions are happening.
Yes. Pramit, I know you don't have much of exposure to any of these companies because by nature, Even though you said India is a big place and we are so excited about it, you're very cautious while lending. That's all foreign banks. Why foreign banks? Even this gentleman sitting next to us.
I am the fastest. Okay. I hope you know I am the fastest growing bank. You know that.
Okay.
So then you get your facts right.
So tell us, how do you see being for the industry? Is the worst behind us? Is there cause for optimism? And that leads to dynamism, then you need to get back to action.
So Tamal, first let me correct you. I think this happens every year where we sit here and you say we are not doing anything. I think we feel differently, the numbers show differently, and we're very happy with the economic progress and the growth that we're seeing in India. So once again...
That's lip service.
Right.
Carry on.
So going back to the subject, see, first of all, I think I understand that every time there's a conversation around the banking industry, we're inevitably drawn into this discussion around, NPAs. But I just think that it's not necessarily correct to paint the entire industry with one brush, because 100% of the industry does not suffer from this problem. And I think there are many parts of the industry that continue to do well, continue to grow, and continue to take advantage of the economic progress and the opportunities that come along with it. So I would just ask that we don't paint the entire industry with one brush. The second is going back to this whole NPA issue. I know there are times when we get up in the morning and feel that not enough progress is being made. But if you really think about it, if you really think about the amount of water that's, flown under the bridge, the amount of progress that has been made, whether it's IBC, whether it's NCLT, whether it's changes to the Banking Regulation Act, I would suspect that if we were sitting here exactly a year ago and having this conversation, and we would have predicted that 1 year out, this is the amount of progress that we would have made as a country, as an economy, or as an industry, I think we would have been surprised. So I think when you look at it in its entirety, I think it's fair to say that there's a lot of progress been made. And as Chanda said, we're in that, recognition stage is behind us, we're in the resolution stage. And I think we will continue to be surprised with the progress that is being made. And the last comment that I would make...
Surprised in the sense, the positive...
Positively surprised, yes.
Yeah.
And the last comment that I would make, which is also, I think, is very important, which is actually goes back to the fundamentals. If you look at what all of this does to the banking industry, not just to lenders, but to borrowers, I think it changes and has already changed a lot of things in a way in which the industry fundamentally operates. So whether you look at the way today banks look at lending, if you look at underwriting standards, if you look at the way projects are look at the way companies are analyzed, I think that is changing. That has changed for time to come. And that's a positive. If you look at the way borrowers look at the way they, will take on indebtedness, what is the longer term implications of that? I think that has changed. If you think about the way, behavior, I think in the past there was almost this expectation around behavior of borrowers, which was very different, and we're seeing some changes in that taking place. So I think we should not just focus on, recognition, resolution, but think of some of the other longer-term fundamental changes that this passage of, this phase of our industry is actually undertaken, which I again think is, from the long-term point of view, is positive.
Thanks, Pramit. Yes, of course, we'll discuss the other longer-term fundamental changes. But this round we are focusing on the bad assets and recognition and resolution, and how far we have progressed. Shikha, your take?
Yeah, so, having heard so many people already, I don't know if I have much to add. I just want to take off on what Pramit was saying about the asset quality issue and where it's coming from. And one, of course, is to look at banks, but I think the other way to think about it is sectors. And if we look at the consumer sector, the SME sector, and the large corporate sector, much of the asset quality problem in this round of the credit cycle has come from large corporate lending, specifically project loans. And I think, given everything that RBI has done around recognition norms, tweaking them a bit, accelerating recognition, I would agree that recognition is largely behind us. I won't say it's fully behind us, because there may be some sectors where there is still stress to get recognized power in particular, and we've said that openly in a lot of our results meetings as well. But otherwise, I think recognition is largely behind us. The NCLT process has been a big game changer, and I think the fact that the government has been responsive in looking at what amendments are required to the NCLT process to make it more effective, I think gives all of us bankers a lot more confidence that this is actually going to result in a game-changing outcome. It's not just a policy initiative, it's actually going to result in a game-changing outcome. We've seen a couple of bids coming through. The good news is that because the economy is turning, see, if the economy was not going anywhere, you could have had the NCLT process and you may still not have had people interested in bidding, and bankers wouldn't have seen value in those assets. But because the economy is turning, and if you take steel in particular, if these bids were called 1 year back, I don't know what the loss given default ratios would have been. But the fact that the bidding is happening now and that sector has changed, I think we're going to recover fairer value for those assets. So that actually gives us optimism that, look, much of the recognition cycle is over, the resolution cycle is coming at a time when the economy is recovering, and therefore we are likely to see fairer value for those assets. And you heard DG speak about it, I think Pramit referred to it as well. One of the other things that I feel very optimistic about, if we take a slightly more medium-term to long-term view, is that if we look back 10 years ago when we had the big consumer credit cycle, a lot has changed as far as consumer credit is concerned. And the big change really has been the emergence of credit bureaus and the acceptance of credit bureaus. So that credit infrastructure has changed the way underwriting happens in that segment, and has changed the way collections happen in that segment, and has changed credit culture. So with the CRILC database that RBI has brought out, as far as large corporate is concerned, I think again we have credit infrastructure which is much better. With NCLT we have collection infrastructure which is much better. And once the NCLT cases end up with a situation where you have new buyers for those assets. I mean, a lot of investors, and I'm sure Pramit hears this a lot of investors tell us that, look, it's stunning that in India you're going to have large promoters lose control of assets that they've built. And that is going to be such a strong message in terms of credit culture that I think a lot would have changed. And I would think that the next credit cycle, the corporate segment is going to perform much better than it has in this segment.
You are essentially saying the banking system is far better equipped today than it was because of the changes in the entire finance infrastructure.
Absolutely.
And they're more efficient.
Absolutely.
And I'm sure all of you will agree that if we ask you to identify the two biggest reforms this government has taken up, one could be GST and other is the insolvency code, right? Okay. Is that? Yes, absolutely. Thank you, Shekhar. Sir, you are the most valued Indian bank, and you also said just now you are the fastest growing bank. That I did not know. This part was...
You didn't know?
No, that you are the fastest growing. Okay, sir. So tell us, what is your take?
So my take is reasonably simple. Firstly, banking is a simple business. So you price to cover your cost and your probability of default and a return to the investor. So the level of NPAs is not important. What is really important is whether your probability of default on your products matches with your pricing. In which case you can continue and the level is not relevant. So at least for our bank we can say that our probability of default on any product has not exceeded what we had budgeted into our model. So on an ongoing basis, NPAs will come, NPAs will go. That is a part of banking. If you price it right, you can provide for it. Right? The second part is, obviously during certain times there are cycles. There will be a situation where in certain sectors you will have excessive defaults. That is what prevailed in the past. I think Shekhar referred to it. Across certain sectors, the probability of default and actual default actually went way out. And those are have been recognized to a large extent. There may be some stuff here and there. So if we split it into two, what is normal business and what is where, I don't want to get into the reasons, but where probability of default or default exceeded, then you have two parts, that the banking system will grow minus what has been an aberration. And we have to learn, and the infrastructure has come in, that going forward, the pricing and the probability of default is taken into account.
That's theory, but what's happening now?
Now what is happening is that most recognition has happened. Little bit here and there because of differences in the timing of the economy picking up could result in things going up and down, but the major recognition of a phenomenon which had a business cycle which hit the banks on the wrong side has been taken into account. The rest of the banking system and the products are healthy and moving forward well. And the resolution mechanism will obviously take a little more time to stabilize, but for the first time you have people who know they have to pay the money back. And I think that's a major change. So going forward, banking is in good shape.
Thanks, Mr. Puri. Sir, Mr. Kumar, you are accounting for 1/5 of Indian banking industry, or a little more than that, 20%?
In terms of advances, yes, 20%.
20%. So tell us, and as I say, that you have massive, because you are so large, you have exposures everywhere. So where do you see, and what Mr. Puri said just now, that for the first time Indian corporations now have understood that you have to pay, I mean, you have taken loan, you have to pay back the money. So tell us, anecdotally, are you seeing there's a change in the body language of corporate India? Are they coming to table, they are evading, or they are, not coming, meeting you, but are they coming back to the discussion table? Are they willing to pay back the money? That's one part, the thing and all. And also a little bit of thing, because you have exposure to most of the companies, like what are the problems? Why have you not been able to, through discussions, why do you have to go for every case NCLT? For instance, the second batch of cases were 28 cases where Reserve Bank of India said that you guys, I'm giving you after 30th December time, why don't you discuss among yourselves and sort this out? And if you can't, then you go to the NCLT. And it seems that banking industry has failed to get out of court settlement kind of thing. Why is this? Is it like adamant corporates, or are you scared of taking a deep haircut? You will end up taking deeper haircut at NCLT?
No, I don't think so. But let me answer your question, what is happening and what has happened. One question about this NPA recognition. So one is that with confidence I can say that if you look at the stressed assets and forget the differentiation for a moment between a stressed asset and NPA, then that stressed asset level is not going up. Then there was a time when most of the sectors seemed to be stressed. But now, if we analyze sector after sector, some of the sectors are on a recovery path and some are still not. So where, for example, it has been mentioned about the steel sector, it is on a recovery path, but the problem still remains on the power sector fronts. And recognition, if it has not happened, in some accounts it will happen in this quarter and at best by March quarter for most of the banks. Resolution part, because NCLT is a time-bound process, at least whatever cases have been referred up to 31st December. So the timeline is that by September you will have the, what do you call the resolution? Resolution means
270 days.
270 days. Yeah. And in 270 days they have to be resolved. And as Madam was mentioning that first list, most of the cases the bids will be received by 15th or 20th February. And in resolution, the recovery will vary from asset to asset. Even in steel sector, we cannot have a thumb rule that we will recover this much. Each asset is different, their liabilities are different, and depending upon their liabilities to various type of creditors, the recovery for financial creditors will be different, but we have seen the worst case scenario of 6% and the best case scenario of 100%. So that is the range, 6 to 100. That is what
6% where it came through NCLT, and 100% you are talking
will
about
also come through NCLT.
Okay.
Will also come through NCLT.
Okay. Yeah. Okay.
So that is one. The question is about like the preference between settling in NCLT and outside NCLT. The advantage of settling through NCLT is, one is the time-bound process, legal sanctity. Anyone who buys, he gets a clean asset, because the resolution of all the creditors, be it financial or operational creditors, there is a resolution plan, and that has been or will be accepted by everybody. And if it is to be outside NCLT, there has to be a very strong reason to accept outside NCLT. So from a banker's perspective, it is yet to be established that your recovery in NCLT will be better or worse as compared to if you had entered with an out of, what you can call out of court settlement or OTS.
Is it also the fear of CAG, CBI and CVC is in play for sorting out this outside NCLT?
No, I won't link it to CAG, CVC or this thing. Definitely when it is an NCLT process.
Not an NCLT, I'm saying outside NCLT?
No, if it is an outside NCLT, and I will give you an example,
Yeah.
that if today somebody comes for an OTS to me,
Yeah.
and if he says I am settling at 70-75%,
Yeah.
right?
Yeah.
I have a case, or I will have a case. Right now, we don't have enough history that what is the recovery percentage for a financial creditor in respect of NCLT cases. But presuming that we are presuming that the recovery will be say 50-55%. So for me to settle anything below that, it will not pass the muster.
Correct.
If I have to settle, I should have a good solid reason for settling outside the NCLT, and there the recovery or the this thing will matter a lot. So if somebody comes that I want to settle at 30%, I will say let us do it in NCLT. If somebody comes and say that no, I have a plan where your 75% money can be recovered, then I will have a thorough look at that proposal and try to see that I resolve this outside NCLT. But 20%, 25%, 30%, then better to go through NCLT process. This is my thing.
My first question was, do you see a change in the body language of corporate India?
Very much.
Are they coming to the discussion table?
They are coming, and we are using this in a very effective manner, let me tell you. Now,
Little more?
No, I think there was a time when NPA was your problem. Your problem means bank's problem. At least that sentence has gone out of the vocabulary of the corporates. It is no more your problem, your NPA, banker's problem.
Okay.
So to that extent, there is a change.
Sir, one small thing I want to add. There is a change in the body language of corporate India. It's no more bankers' problem. They have recognized it's their problem. Do you also see a change in the body language of bankers? In the sense, what I'm saying, till recently, I would not call it in a denial mode, but you are postponing the inevitable. Given a choice, no, abhi usko rakho, aur ek quarter dekha jayega. But now you are on an overdrive because of Reserve Bank of India, everything push and all. So you don't want to wait even a day. Just whatever first flicker of some disappointment in terms of recovery, usko NPA kara do. Is it like the other extreme have you gone, the Indian banking system?
I won't call it another extreme. But
because you are saying that there is no choice, so RBI to hai pakdega, karo usko kara do.
Is that RBI, they will do their role as a regulator and as supervisor. So they are there to perform their role. But on commercial considerations, on any consideration now at least, and you have to understand the background also, that why there was reluctance in recognizing the problem also, because there was no effective mechanism to recover your money. Your DRT, your SURFACE Act, all failed the banking system. Banking system does not work in isolation. So you can have a very good international standard prescribed for the banking when it comes to recognition and this thing. But it's a supporting ecosystem if it is just centuries behind. So how do you resolve? So the compulsion for the banker was that live with it, if you can revive, rehabilitate, your recovery will be better. So we cannot ignore that dimension. But yes, because now we have mechanism, and that mechanism at least till now seems to be working. So no compulsion or no reason for the bank to be hesitant in recognizing the problem upfront. So it may be RBI driven. I don't say that it is not RBI driven, but today it is also driven by the fact that where we feel that if we take such action, there is a mechanism for resolution or recovery or whatever it is, but the approach definitely is much more now upfront, and the realization is that it doesn't tell if you don't recognize it upfront and you start thinking about resolution.
So the new architecture has made the Indian bankers more aggressive, isn't that?
Yeah. So what is there? So
No, it's fine. No, it's absolutely fine.
more realistic, more empowered,
Acha, you are empowered.
and more realistic,
Yes.
and less fearful of recognizing
Great.
a problem account, let me put it this way, and this fear of this percent of NPA, this percent of NPA, or what will happen, and this thing, that fear is gone, because now in any case you are in a situation where the problem is at its peak.
Yeah.
So now whatever way I look at, the addition to fresh NPAs in next 12 or 15 months, and the resolution. So resolution will be definitely higher than what the banking system is going to add to the NPA. So at the overall level also there is going to be a reduction. How much will be the recovery and how much will be the write-off?
We have to wait and see. Yeah.
No, that
Thank
will
you, sir.
depend upon
Thank you,
case-to-case basis,
Thank
I
you,
understand.
sir. So we are talking about optimism and dynamism. After a long time, few years, we are seeing that Reserve Bank of India data shows that there's a credit uptake on the positive, the good. So tell us, we'll start with Jayakumar, that as the cycle turn, now we are we'll see now from now on, there'll be credit uptake, which for the past few years we have been talking about how many decades low credit uptake, single digit, so on and so forth. And you are also telling the world, and of course consolation, that don't look at the bank credit alone, because there is so many credit substitutes. It's very unfair to look only at the bank credit, because you have reasonably vibrant corporate bond market, which was not the case even a few years back. But now you are saying that credit uptake is taken. So are you seeing a new cycle, bank sir, now, because its NPA story is behind us, behind the banking industry, you are getting into now pumping up your credit book? And if it is, which are the sectors you see the credit demand?
Okay, I think we are seeing a credit growth. Last quarter also we showed up, we had a 13 or 14% year-on-year growth rate. And there is many reasons for it. One, of course, is a discussion around the economy and its pickup and its inevitable resultant in terms of demand for credit. The capitalization of the bank, recapitalization of the bank also provides enough headroom from capital from a growth perspective. The third thing is the number of measures that are there as a part of the reform package with respect to public sector bank will increase the quality of banking and the capabilities of this institution to be able to compete effectively in the marketplace. So within that sector, I do see public sector banks being able to having a real chance of getting back to some level of market share gain. Then there's a whole lot of changes that are happening with respect to the platforms that are being available today. And those are providing different methods of underwriting and different methods of reaching customers, different partnerships that are emerging. So that is a fairly positive process around it. And finally, you discuss about the body language, the confidence and everything else, and they also have their own inevitable effect on the outcome. So viewed all of these things together, I think the outlook looks quite positive.
Okay, so on the bad assets, the worst is behind us. On the slack credit uptake, also the worst is behind us. From now on, we will see higher credit uptake. That's what you're saying, right?
I would think so, very much so.
Thank you. Ramit? Credit uptake?
I would just add a few things. I mean, first of all, the Deputy Governor talked about the credit offtake year on year for the first 9-10 months of the year, which is for the first time in a while showing a positive trend. I think the second is that if you look at retail credit growth, that has pretty much been intact right through this process, and that continues to be very robust. The third thing I would say is with a slight uptick in inflation, you will generally see an increase for working capital loans. We're already seeing that. There is an increased demand for working capital credit. And the fourth and important thing is, so if you were about 12-15 months ago, we saw a very significant migration from bank credit to the capital markets, to corporate bonds. And today when you look at it, with the bond yields having hardened by what, 120, 130 basis points, I think there is a very good case now for borrowers to come back to the banking system, on either MCLR-based lending or otherwise. And that again, in my view, will lend itself to increases in credit offtake. So when you put all of this together, along with clearly the capitalization numbers being in reasonable shape pretty much across the industry, For the private sector, a number of private sector banks have raised capital. The public sector banks are getting the infusion. I think credit offtake for the next 12 months must look much better than it has for the last 12 months.
Chanda, what's your take on credit uptake? And could you tell us which are the sectors that, as Pramit said, that retail has all along been, it's been with the mainstay. In the past few years, when corporate credit was low, for multiple reasons, because there was no investment, corporations are not coming and asking for credit, banks are also under stress, so they are also not willing to lend, then there's a capital issue, etc., etc. So retail has all along supported the system. But now, are you seeing that even in the corporate segment, and as Pramit said that working capital also, they take us for credit, which are the segments you see?
Yes, so on the retail side, as you see, even the high frequency macroeconomic indicators, I mean the consumption of non-durables continues to go up, two-wheelers continues to remain strong, cars are being bought, so all that has anyway ensured that the retail growth continues to remain quite stable and strong. On the corporate and the SME side, there are 3-4 areas where the growth is coming from. First of all, the capacity utilizations in some of the industries like steel, cement have definitely gone up. And this capacity utilization is actually leading to higher working capital demand. The second is that as interest rates were coming down, in fact, a lot of the higher rated corporates, including the PSUs, were doing a lot of refinancing of their existing loans. So again, that gave a new business opportunity for some of the banks. And the third also is that as government spends are taking place, there is a second order impact of that in